Manish Sonthalia is our market master today. He's CIO at MK Investment Managers, and he's joining us now to take some questions. Manish, good to have you with us here. Thank you very much. Maybe stretching the point a little bit, but maybe not that much, because the previous highs are about 3.5% away. Do you think we have a clear path now for a decent rally all the way into the end of the year? What's your sense?
No, so there is a confluence of positive and negative factors, both emerging from the global front as well as the domestic front. I mean, right now on the domestic front, we have the state election results coming out on 3rd of December. I mean, that's one hiccup that the markets need to overcome. But clearly, on the positive side, U.S. interest rates look like having peaked off, given that inflation has cooled off very, very sharply. In spite of the Middle East tensions, you have oil at less than $80 per barrel. I mean, that's all positive. So I think given the confluence of the positive and negative factors, we would likely have a range-bound market between, let's say, 19,000 to 20,200 on the Nifty. I mean, that's what looks like, plausible in the near term. I mean, it could be till about the end of the financial year, or could be, slightly lesser than that. But clearly, till about December, this seems to be the target.
Okay. Manish, hi, good morning. What are some of the big themes? I was looking at the portfolio that you folks have, where you're looking at, I think, mid-cap and small-cap stocks, the emerging giants sort of theme. And quite a few interesting facets are out there. I think digital is one thing that you're looking at, then you're looking at financialization. So a couple of these mega themes that you're playing. Let's talk about digital. Nykaa, by the way, on my screen is again up about 1% or 2% thereabouts this morning itself. Now, in digital, given that stocks are beginning to rally back, numbers are also looking good, what kind of themes or what kind of companies are you tracking and liking?
So in digital, I think consumer tech space, you have a few companies out there. I mean, those look like having reached an inflection point where there is a non-linearity that is coming through. I think these stocks can move 2x, 3x from these levels. Artificial intelligence is one big theme that is set to rule the world in many years out. The game has already started. Indian IT companies will also stand to benefit out of this. You have some small companies, of course, the valuations are not very palatable, but the growth seems to be coming through good, and we'll be looking at some of these companies. So I think artificial intelligence, consumer tech, married with retailing, these are some of the names that we would be looking at in the digital space.
So you mentioned artificial intelligence. We don't have too many pure play entities that are like right at the forefront. So are you suggesting that you look at some of the existing IT large cap names, the big IT boys, and perhaps play AI through them, or how would you look at it?
Before artificial intelligence becomes mainstream, there would be opportunity both in the mid and small cap space. Many of these companies will get created outside the mainstream IT companies, and as like in the cloud computing space, they got integrated into mainstream IT companies only after a while. So similar is the situation which we are likely to see even in the artificial intelligence space. A lot of work is happening. And I think a few of these names in the portfolio, and there are a few of them in the listed space as well. Since we are creating the portfolio, we can't talk about individual names, but these would be emerging companies, not the mainstream IT companies that we would be looking at currently.
Okay, all right. Hi, Manish. Good morning, and good to see you. And I recall the last time we chatted in a few months or so ago, you were talking about the pharma pack, and if I remember correctly, you were telling us that Gland Pharma. That was just an example that you cited. Maybe all the negatives are in the price. The stock from there is up more than 40–50%. What's your take on the 100%? Is it all right? I thought it was around 950 odd, or 1,000 rupees. It's actually 1,600. So okay, 100% up from there. So it's doubled. So what's the outlook with regard to say Gland Pharma and various other pharma stocks? The index on the whole didn't perform for a couple of years, but now it seems it's back. Your take?
So, I mean, as I had alluded that time, it is a classic case of a stocking and a destocking. And if you have seen this quarter numbers for all pharma, the entire pharma pack as a whole, they have shown some very good numbers, both on the domestic pharma side as well as the generic export side or even injectable export side. I think normalization post the COVID is happening. You have lesser price erosion, competition, thanks to capacity rationalization happening globally. I mean, and even in India. And I think valuations, as opposed to many of the sectors in the market, are quite reasonable, so to speak. And these companies are fabulous businesses for the long term. So from that point of view, I think I am still overweight pharma even at these levels. And I think both, I mean, there will be pick and choose within the pharma pack, but specifically talking about, let's say, a Gland Pharma or an Ipca or an Alchem. I mean, these are, or a few others as well, Mankind, etc. These would be very good picks even at current levels, given the longevity of growth on the farm on these names. And I don't think really the valuations capture entirely the positives that are available on these names even now.
Got it. Manish, any thoughts on? We, by the way, played out a small snippet of our conversation with Mohit Burman. Burmans are the single largest shareholders in Religare. A lot of hopes, of course, on Religare. I think your previous organization is one of the large shareholders in Religare. But any thoughts here? Because the care healthcare business, but of course there is now this corporate battle brewing, which may elongate things in terms of how all of this will play out. So it's not so straightforward anymore. Any thoughts at all?
So I think the equation is very simple out here. The entire thing is about, I mean, the entire upside in Religare is about the growth that you're going to see in care health, right? And whether it's going to be vertically demerged or whether care health goes for a listing. Now, I think I mean, the open offer is still on, and I think given the growth in care health, this whole tussle about who is going to regain control of the entity, the holding company as a whole, is what going to decide how far Religare can move in the medium term, so to speak. I mean, short term is all we know is there are news flows that are there where there is a struggle to by two parties to regain control of the holding company. But in the course of time, I would believe that once this whole thing gets sorted out, it's going to be about where there is going to be a vertical demerger of the care health business, the NBFC business, and or whether it's going to be about listing. In that case, the holding company is likely to see a holding company discount. So the best situation that is plausible for minority shareholders would be a vertical demerger instead of a listing of care health. That is going to be the best possible situation for minority shareholders. And that would broadly be the outcome of the struggle that is there now between the two parties. The Burmans who want to have control over regain would be the majority shareholders, or whether it's going to be the other side where it's going to be a likely listing of the health insurance business. So, I mean, that is where the situation is currently.
Okay, got that. By the way, metals has become the top trade on the large cap index now. Look at this. Look at Hindalco fly 4.5% up on Hindalco. Tata Steel, JSW Steel, all of those stocks are stacked up over there. One of the best performing sectors of the market this morning. Manish, energy transition. Again, I'm going back to that one pager on your portfolio and some of the themes that you're tracking. Again, not too many direct listed plays here in India, but this is one company really spearheading energy transition. Though a lot of conglomerates are doing it overall. I mean, we talk to Tata Power, they tell us that renewables is their key focus, even though there's a lot of chatter on thermal power capacity right now. So how would you play this energy transition theme?
So, Surabhi, I mean, energy transition and moving away from fossil fuel to green energy is a fact now. I mean, it's no longer, if and but. Given that we want to reduce our dependence geopolitically on fossil fuels, that is one aspect which is in favor. There's technology advantage which is in favor, the cost advantage which is in favor. So all of these things would mean that right from production, generation, transmission, distribution, till consumption, the entire value chain will see very large growth between now and 2030. And there are a lot of plays in the energy transmission space. And I'm alluding to the fact it's not just the production companies. When we are talking about wind power generating companies or solar power generating companies, but somebody who is going to be making the module, somebody who's going to make the glass, somebody who's going to, let's say, make the cables, the conductors. And let's say there are companies involved in electric charging stations. We are also looking at battery electric storage. So this entire space is buzzing with activity. And there will be many companies which are very small currently, which will become giants in the next 7 to 10 years. And that is why we're targeting this space. It's no longer if and but whether energy transition is on us, but it is on us. I mean, and there are a lot of players. You're already seeing some of the numbers that are coming through. The outlook, the visibility on earnings seem to be quite good. So, I mean, I would believe that this is one of the space which will do quite well.
Okay, all right. Manish, always good hearing your thoughts. Thanks so much for joining in and filling us in with your take. Wishing you a good day ahead. Well, let's focus on Narayana Hrudalaya. Well, those numbers look very, very good. To discuss this and more, we are joined by Ms. Sandhya, the Group Chief Financial Officer of the company, who joins us on the show. Hi, ma'am. Morning. Thanks so much for joining in. Well, the company has shown consistent improvement in margins. Now it's at around 23.5% odd. What's leading to this improvement? Is it cost containment or is it better surgical revenues which is aiding the RPOB? Could you tell us what helped it and what's the outlook on margins going ahead?
Good morning. Thank you for having me here. It's been a mix of both the aspects that you spoke about. There is definitely improvement in the surgical mix. But I do want to say that a lot of it has come because of digitization, improved throughput, and cost rationalization. So if you would see our revenue growth profile over the past, say, 8 or 10 quarters, you would see that a lot of it has been achieved without a significant growth in the average revenue per patient. That's because we have always been very, very conscious of our price point, and we have kept our price increases to the bare minimum. We have not passed on costs to the patients, and we have tried to work from a technology and efficiency point of view. Now, some of that has started reflecting into the performance, and therefore you are able to see the improvement in EBITDA. Having said that, we don't guide into the future. Definitely, we will continue to keep working on cost. The only call out I will have is that there is a continuous headwind that healthcare keeps facing, like we've spoken before. In addition to inflation, there are also government actions that get taken, like price control, etc. When we are hit with such headwinds, we don't pass immediately the impact of the headwind to the price, but instead we work on it and work on efficiencies and costs and throughput, and that's how we try to counteract these headwinds. So to that extent, there will be a lag in our margin catch-up. Overall, yes, this has been cyclically a good quarter for us.
Sandhya, hi, good morning. I remember the last call, and I think I might have been on the show, and I think it was Q1, the Q1 call, and you said categorically that you're not going to be chasing price growth. It will be all driven through internal efficiencies, and that's exactly what you've delivered in the second quarter. So can you just clarify this improvement in margin? You're at about 23% now. That's entirely through the efficiencies and cost rationalization. There's been no price hike. Are you planning a price hike at all in the second half of this year?
There has been no price hike. In fact, we don't take up prices during the year. What we do is, at the beginning of the year on 1st January, we publish our prices on our website, and that's the price for the rest of the year. Under very, very unusual circumstances, we may take up the price, but we have never done that.
So, okay, now that we are in, sorry to come in over there, I got that. So now that we are in November, my logical question has to be that given medical inflation, given the trends that you're seeing across your peer set as well, as you're looking at the next year, give us some thoughts, at least on pricing, if not the exact number that you're looking to take.
We are working on that, actually. There has been a significant inflation, that's a fact. So we are working right now on how much we can counter through our own efficiencies, and if we really need to take up a price increase, and if then how much. So 1st January is when our price increase will be. So when we speak next quarter, I'll be able to give a more firmer view of the range of the price increase we may have to take.
Sandhya, hi, good morning. typically, but and it'll vary across sort of various disciplines and various departments, etc. But what is the price increase, blended price increase that you take every year?
Very low single digits. That's what we took last year and the year before. So that's been the range at which we've taken price increases.
And you think, without going into specifics or anything, it should be around, it should be what in the range of what you've done so far in terms of hikes?
Yes, that's how we are aspiring, but we're still doing the numbers right now, so it's too early to comment. So if you can give us a couple of months, 1st April anyway, 1st January, it will anyway be on our website, and when we speak next, I can share more details.
Okay. You said there were some government actions sometimes which hurt. Is there anything specific you were referring to with regards to anything which has hurt your business, or was that a general statement?
Recent action, we've not had a specific large action, but periodically government keeps looking at various prices, and there are price caps which keep coming. So in the short term, where you have fixed contract, it becomes difficult to adjust to these price caps and other interventions that come from the government.
Got it. All right, Sandhya, what about the HCG Healthcare Global? There's a big PE in there that's apparently looking for an exit. Have you all looked at that asset at all?
I don't think I think we have always shared our strategic plan very clearly. We have wanted to build. We have built a very strong portfolio of services, and we are doubling down on our capacity, our strength, and we look at inorganic assets from time to time opportunistically. Now, that's all I can comment at this time.
But have you looked at this asset? We get that you'll have made a strong foundation. You could look at various assets, but is HCG something that could fit into your scheme of things?
So our oncology business has picked up reasonably well over the past 2 years. We now have one of the largest bone marrow transplant capability in the country. We do the largest number of pediatric bone marrow transplants in the country. We also do a significant amount of work on oncology. So I think we have a strong business we are building on. So we would focus on building our business.
So you'll focus on it organically. That means you're not interested in HCG. Is that correct?
I don't know whether it is fair of me to comment whether we're interested or not. I can only comment on what we're doing right now, which is building our business.
Sure. Got it. Just thought we'll quiz you on that. Also, you all have plans to get into the insurance business, right? What's the update out there?
So we have applied for our license with the IRDA. We are going through the process. We are hopeful that once we are able to satisfy the IRDA that we deserve the license, we will be able to get the license. So I can only say that it is on track. But it's a time-consuming process, and we are going through the motions.
Okay, Sandhya, leave us with an outlook in terms of capacity addition and also the newer hospitals. What are the sort of timelines, for instance, break even for the Mumbai hospital, the newer facilities, and how many beds will you be adding in the second half this year? And also, if you could give us some outlook for next year.
We are not adding any significant number of beds for the next 2 to 3 years because a lot of our capex plan is on building greenfield capacity across our flagships. So our next set of big capacity increase will come in a span of 2 to 3 years when all these greenfield facilities are commissioned. Having said that, we will have like a 10-bed addition, 50-bed addition. There is one 2-floor expansion we are doing in Calcutta. So all of those small additions will keep coming from time to time. Like I had mentioned before, we also opportunistically keep looking at inorganic options, and if there are something that fits in our scheme of things, that may cause some bed additions. But really, the significant bed addition will come only in 2 to 3 years' time. However, we have enough headspace to keep growing until then, and we want to keep pushing our efficiencies. to be able to reach that targeted growth.
Okay. Well, Sandhya, we'll leave it there. Thank you very much for joining us. Great speaking with you. Appreciate you joining us here on CNBC TV 18, as always. Well, that's Narayana Hrudayalaya with commentary on what the future looks like. Price increases from the 1st of January, as they always do. Low single digits is what we should expect, but of course, the specifics in the next couple of months. We'll take a quick break here. We'll be joined by the management of Kalyan Jewellers. That's the other stock which has done very, very well. We discussed the performance for the quarter gone by. A little after that, we'll have the management of PNB Housing Finance to discuss their second quarter numbers as well. So it's power packed. Stay with us.